Welcome back to the Property Punch podcast. I'm Tabo, and as always, I'm joined by my co-host, property mentor, and dad, Washington.
Great to be back. Episode 16 already. And today's topic is a very important one because we are talking about strategic investments.
This one is huge, especially for first-time investors. We're talking about why your first investment property is not supposed to be your dream property.
And this is where a lot of people get stuck because emotion shows up before strategy.
Out of all the traps to get stuck in terms of property investing, the emotional trap is the worst one.
Yes.
Let's start here. Why do people want their first investment property to feel special?
You see, for a lot of people, buying a property, whether it's an investment property or it's for you to live in, it's a very emotional decision. And fairly speaking, and for most people, that property purchase is probably their biggest purchase that they've ever made. They want it to look good, they want to be proud of it, and fun enough, even if it's an investment property, a lot of people are imagining themselves living in that property.
And people still think that or feel like that even with an investment property.
That's correct, fun enough. And this is where the lines get a bit blurred. People often mix lifestyle thinking with investment thinking.
That blurring of lifestyle thinking and investment thinking can often have catastrophic consequences.
We've seen it a lot. We've seen that a lot happening.
So let's help people separate the two.
100%. Let's get into it.
What's the difference?
So lifestyle property is about emotions, it's about lifestyle, it's about comfort, and it's about personal preference. On the other hand, investment property is about performance. It's about numbers, and it's about the long-term outcome of that investment. So your first investment property should never be about where you want to live. It should be about really what moves your strategy forward.
And when people don't separate this, they either overpay or the property underperforms.
And to be honest, what we have seen is actually both of those things happening. Overpaying or underperformance.
So now that we've separated the two and studied the differences between a lifestyle property and investment property, let's really talk about the nitty-gritty and explore what your investment property is meant to look like. So, if it's not meant to be a dream property, what is it meant to do?
So that's a good question, and there are three things to consider here. First up, it should build your confidence as an investor. Second, it should strengthen your financial position. And third, it should set you up for your next move. In other words, your first property is your foundation piece, not a trophy.
And that's a really big mindset shift.
It is, but what we have seen is that often changes everything.
The big word here is strategy. I think this whole topic is calling out what strategy first investors should use. But to really emphasize the importance of a good strategy and a confident, strong mindset, we need to first explain and explore how badly emotion can hurt long-term strategy. So what happens when emotion leads to decisions?
You know what, Tabo? People often choose better finishes than good yields on a property. Nicer locations, instead of stronger fundamentals. They choose properties that they like instead of properties that actually perform. So emotion doesn't feel dangerous. What emotion does is it quietly reduces your options a bit later on.
Like I say in most of our episodes that are more conceptual, it's great to talk about things in theory. But let's go through some real life examples of how emotion has hurt strategy.
So I've seen, clients being misguided. Basically, whether they would have not come for mentoring or advice. We've seen clients buying a dream lifestyle. That looked great, that looked beautiful, but it drained cash flow. It really sucked their cash flow out of their life. Others bought something quite boring, in a regional town, jewel key for cash flow purposes. And that property that they bought, it set them up for their second investment and for their third investment because it was actually a cash cow for them.
So oftentimes, boring actually wins in property.
It does. Boring often builds wealth.
Oftentimes, in emotion is one of the most dangerous ones, arguably, which is ego. People's egos can get in the way of a clear and good strategy. So in order to win, people need to separate ego from strategy. So let's talk more about that ego.
You know what? Ego shows up when people are trying to impress others or themselves. And on the other hand, strategy asks one question. And that one question is, does this investment property move me closer to my long-term goals? If the answer there is no, it doesn't matter how nice it looks, that property is not good for you.
So when investors move away from emotions such as ego, what should they focus on instead of the dream?
So here's the deal. To answer your question, instead of anyone wanting to buy a property asking themselves, would I live here? The question should be, does this property fit my numbers? Does this property support my strategy? And does this property help me to keep going? So, dream properties come last, whereas strategy should come first.
Your reflection this week is simple. Are you choosing your first investment property based on how it feels or how it functions?
So in other words, your first property doesn't have to be impressive. It simply needs to be effective.
That's episode 16 of the Property Punch podcast.
Subscribe, share this episode with someone buying their first investment, and we'll see you in the next episode.
Sip smart, invest better.